This is ICD Brookfield, and it's one of the most sought-after office spaces in the UAE. This building is home to large global banks and consultancies, but it's also a retail and entertainment district. With so many concerns and questions circling about the outlook for commercial real estate, rising interest rates, and inflation, I sat down with ICD Brookfield CEO Rob Devereux to understand the state of the market in the UAE and the broader Middle East.
ICD Brookfield Place is a joint venture between the Investment Corporation of Dubai and Brookfield Properties, a 50-50 joint venture. The mandate from the owners from the outset was to create really a best-in-class office building that you would expect to find in London, New York, Singapore, Hong Kong.
ICD Brookfield has 990,000 square foot of prime office space spread across 53 floors, and its gyms, retail offering and restaurants are all aimed at enticing remote and hybrid workers back to the office. We are 3 years post-pandemic now, but the outlook for CRE has never been more divided. So how is this asset actually performing?
Roll forward 3 years and we're 98% leased and under offer. So the asset has performed incredibly well, and I think that is indicative of what's happening around the world, where there is a flight to quality. Our clients, our tenants want to commit to spaces where their people want to be.
While other cities are witnessing the demise of the downtown office, Dubai seems to be bucking a global commercial realty trend. Average office occupancy rates hit 93% in the second quarter of 2023. That's up from 85% a year earlier. Prime rents have also jumped 20%, according to CBRE.
Dubai and the UAE, in fact, were very successful in keeping the economy open during the pandemic, and I think a benefactor of the pandemic. And with the growth of population, we've seen a lot of businesses move to the region. I think Dubai has reinforced itself as a global business destination.
And for more on where Brookfield is deploying capital into the region, I also spoke with managing partner and regional head of the Middle East, Jad Ellawn.
Well, look, in general, I think we're looking at a golden decade here in the GCC. If you look at non-oil GDP growth, we're looking at 5% or above, which is very strong. And so when we look at this region, we see that we've got a strong rule of law, we've got creditworthiness within both the tenancies as well as the sovereigns that are here, and you are investing in a dollar-denominated region. And so when you put those together, that provides a high growth environment along with the stability of a dollar-pegged currency. And so there aren't many jurisdictions around the world that can provide that outside of the United States, naturally.
Brookfield has $5 billion in assets under management across the Middle East, and it plans to grow that to as much as $20 billion in the next 3 to 5 years, with positive trends in prime real estate expected to play a central role. Dan Murphy, CNBC.